So let's break down this two-mark trap. The heart of the issue has nothing to do with client agreements or supplier choices. Nope. It's all about the nature of the exemption itself. And to get that, we have to start with the basics, right from the act itself.
First things first, what in the world is an exempt supply? Well, according to Section 2, subsection 47, it's pretty straightforward. It's any supply that has a nil rate of tax or is specifically called out as wholly exempt. It also ropes in non-taxable supplies, like alcohol for human consumption. This definition is our ground zero.
Right, so where do these exemptions even come from? They don't just appear out of thin air. There's a proper process and a source of power behind them. And honestly, understanding who's calling the shots here is key to avoiding all this confusion.
The power to grant these exemptions is handed to the government by Section 11 of the CGST Act. But, and this is a big but, the government can't just do it on a whim. It has to be based on recommendations from the GST Council. It's all very official, all done in the public interest. So how does the government actually do it? Well, there are two main ways. The one you're going to see 99% of the time in your exams is the general exemption. This is done through a notification, and it applies to everybody for certain goods or services. Then there's the other kind, a specific exemption, which is done by a special order. It's super rare and only for exceptional cases. So for your exams, just focus on those notifications.
Okay, everybody, listen up. This right here, this is the whole game. This is the single biggest reason people get that first question wrong. The difference between an absolute and a conditional exemption is literally where marks are won and lost. This table lays it out perfectly. A conditional exemption is just that. It has conditions. Because there are conditions to meet, it's optional. You can choose to meet them and get the exemption, or you can say, nah, I'll just pay the tax. But an absolute or unconditional exemption, it's the complete opposite. There are no conditions, and there is no choice. And here's the knockout punch. It is mandatory. You shall not collect tax. It's not up for discussion.
Let that just sink in for a second. When an exemption is absolute, the law doesn't care what you or your client wants. The choice is taken away from you. The exemption is mandatory. You are legally forbidden from charging GST on that supply.
All right, so you've learned to spot the main trap. Feeling confident? Good, because ICAI loves to throw in advanced curveballs. There's a sneaky little twist with dates and exemptions that can catch even the sharpest students. I like to call it the time travel rule. So here's how it works. Under Section 11, subsection 3, the government can issue a clarification for an exemption notification. They call it an explanation, and they have a 1-year window from the original notification date to do this. The whole point is to clear up any confusion. But this is where the twist comes in. Check out this timeline. We've got an exemption that starts on September 21st, 2017. Then, almost a year later, on July 26, 2018, the government issues an explanation for it. And that explanation officially goes into effect the very next day, July 27th. So here's the million-dollar question for you. When does this new explanation actually start to apply? Is it July 26th when it was issued? Is it July 27th when it became effective? Or is it something else?
And the answer, the time travel part, is September 21st, 2017. That's right. The law says that any explanation like this has a retroactive effect. It applies all the way back from the date the original exemption was born, as if it was there the whole time.
And there you have it, the big ICAI trap alert. In a case study or an MCQ, they're going to throw a bunch of dates at you. Just remember, the effective date for an explanation isn't its own birthday. It's the birthday of the original notification it's clarifying. It literally travels back in time. Do not get caught by this. GST exemptions for charitable trusts. This is one of those areas where you can either grab some easy marks or lose them in a heartbeat. Let's dive right in. Okay, take a good look at this question on your screen. Read it through. Now, what do you think the answer is? I mean, it seems pretty straightforward, doesn't it? You see charitable trust, you see them doing good things. Seems like everything should be exempt. Go on, pick an answer in your head. Lock it in. If you hesitated for even a second or felt a little unsure, you are definitely not alone. So let's break this thing down. So here's the deal. The whole trap hinges on one single word, charitable. In our everyday conversations, charitable means one thing, right? But in the world of GST, oh no. It has a very specific, very narrow, and legally defined meaning. And just assuming the everyday meaning is probably the single biggest mistake you can make on this topic. So how do you sidestep this trap? How do you guarantee you get full marks on any question about this? It's simple. You just have to remember 2 golden rules. Every single time you see the words charitable trust in a question, your brain needs to immediately run this 2-step check.
And here they are. First, the trust absolutely has to be registered under Section 12AA or 12AB of the Income Tax Act. This part is completely non-negotiable. And second, the service they're actually providing has to be on a very specific, pre-approved list of charitable activities defined in the GST notification. If even one of these 2 things isn't met, the exemption is gone. Poof! Both are mandatory, no exceptions.
Okay, so what exactly are these charitable activities that the GST law actually recognizes? Look, it's not some broad, feel-good concept. It is a very precise and very limited list. Let's take a look at the main categories right now. The law really only cares about these 4 pillars. That's it. You've got public health services, but only for specific vulnerable groups. Then there's the advancement of religion, spirituality, or yoga. Third is education or skill development, but again, only for very specific groups of people. And finally, preservation of the environment. This is the entire universe of what GST considers an exempt charitable activity.
Now, this is a super critical point. If a trust, even a fully registered 12AB trust, provides a service that isn't on that specific list, let's say they're granting advertising rights or charging a fee for a music concert, that service is taxable, period. Just being a trust doesn't give you a blanket exemption for everything you do.
Now, let's zoom in on one of these, because this is where the ICAI gets really sneaky. Let's look at that third category, educational programs or skill development. There is a tiny, tiny detail in here that is an absolute favorite for them to put in MCQs. Okay, you really need to pay attention to this. Skill development for people over 65 is only exempt if they live in a rural area. The second the question says they're in an urban area or a metro city, or they might even name a city like Bangalore, that exemption is gone. The service becomes fully taxable. It's just a 1-word change, rural versus urban, that decides whether you get the marks or not. All right, let's switch gears to another place where marks just disappear. Renting of property by a religious trust. Now, this isn't about those 4 charitable activities we just talked about. This is a completely separate exemption, and it's all about the numbers. If you get the limits wrong here, you lose the marks. It's that simple. Take a close look at this table. For a room, the charge has to be less than 1,000 rupees a day. That means if the charge is exactly 1,000, guess what? It's taxable. For a community hall or an open area, it's got to be less than 10,000 per day. Again, if it's exactly 10,000, it's taxable. And for a shop, it has to be less than 10,000 per month. You have to memorize these numbers and that less than rule. It's crucial. You think that's all? Oh no. Beyond these main rules, there are a couple of other very specific twists that the ICAI just loves to test people on. So let's cover them real quick so you are completely prepared for anything they throw at you. Okay, this is entry 80, and the difference here is so important. Training in sports is exempt, but only if it's provided by a charitable entity registered under 12AA or AB. But training in recreational arts or culture is only exempt if it's provided by an individual. So if a charitable trust gives painting classes, that's taxable. But if an individual artist gives those same painting classes, it's exempt. Who is providing the service is everything here. So here's a really common assumption students make. A religious trust organizes a religious pilgrimage, a yatra. It feels like it should be exempt, right? I mean, it's a core religious activity. But what does the law actually say about this? Well, the answer is a big, clear no. This is a huge misconception. General yatras organized by trusts are taxable. The exemption is extremely narrow. It only applies to services provided by very specific organizations. We're talking about the Hajj Committee of India and Kumaon Mandal Vikas Nigam Limited, or KMVN, and only for those pilgrimages facilitated by the government of India. Any other yatra is taxable. All right, deep breath. We've gone over the rules, we've looked at the traps. Now let's go all the way back to that very first question and apply what we know. We're going to dismantle it piece by piece using the framework we just built. Here it is again. Now the question tells us ABC Trust is registered under 12AB, so our golden rule number 1 is satisfied. Check. Now we have to check each of the 3 services against the definition of charitable activities and those other specific exemptions we just talked about. Let's break it down. First up, coaching for cricket. Is it exempt? Yes. We just learned under entry 80 that coaching in sports by a registered charitable entity is exempt. Perfect. Next, yoga training. Is that exempt? Absolutely. Advancement of yoga is right there on our list of charitable activities. Okay, now for the last one. Skill development for people over 65 in a metro city. Is this exempt? No. This is the trap. The exemption only applies if they are in a rural area. A metro city is urban, and so this service is taxable. And there you have it. The only service in that entire list that is liable for GST is the skill development service. The cricket and the yoga are both exempt. So the correct answer is B. Okay, picture this. You've got an engineering college on one hand and a higher secondary school on the other. They both hire a private bus company to transport their students. The question is, where does the GST exemption apply? Is it for the college, the school, maybe both? Or plot twist, neither of them? Go on, lock in your answer. Now, if you hesitated for a second there, or if you felt a little bit unsure, you're not alone. This is a classic ICAI trap, and it's a super common place to lose marks in both MCQs and the bigger descriptive questions. But hey, that's why we're here. We're going to crack this code together.
So let's start by digging into why this is such a sneaky trap in the first place.
Here it is. This is the #1 misconception. Students have this tendency to think, oh, it's an educational institution, so any service provided to it must be exempt from GST. And let me tell you, the ICAI knows this and absolutely loves to test this oversimplification. It's a trap you've just got to learn to spot. So how do we avoid the trap? Well, we have to go right back to the beginning. We need to ask, what does the GST law actually mean when it says educational institution? Because, the definition is probably a lot more specific than you think. See? Under GST, it's not just any place that teaches something. The law is very, very specific. It's basically broken down into 3 buckets. First, your typical schools, from preschool all the way up to higher secondary. Second, institutions like colleges that give you a degree recognized by law. And third, any approved vocational courses. This definition is our foundation, so you have to know it. And making this distinction is absolutely crucial. A recognized school, a university, even the IMs, they all fit inside that legal definition. But, and this is a big but, a private coaching center, say for banking exams or the UPSC, it does not. Services provided to these centers are always taxable because for GST purposes, they are not legally considered educational institutions.
Okay, you with me so far? Good. Because now we're about to add another layer. The real heart of the exam trap is buried in entry 66 of the exemption notification, and it makes this huge distinction between services an institution provides versus the services it receives. Now, services provided by an educational institution to its own students, faculty, and staff, that's generally exempt. Think about things like tuition fees. That's pretty straightforward, right? The real danger zone, the part where the ICAI sets its traps, is in the services provided to the institution from outside vendors. This is where it gets really tricky.
All right, lean in for this next part. I'm serious. We're about to uncover the one specific detail where marks are either made or completely lost. This is the twist in the story, so you're going to want to pay very close attention. So, the law lists out a few key services provided to an institution that can be exempt. And look, there it is. Transportation of students. It's right there, along with catering, security, and cleaning. So, looking at this, you'd think these services should be exempt for all educational institutions, right? Seems logical. And then bam, this is the line. This one sentence changes everything. It says that the exemption for those specific services we just saw, transport, catering, security, it's not for all educational institutions. It is only for schools providing education up to the higher secondary level. That's it. This image just says it all, doesn't it? This is the ICI twist we've been talking about. The very same bus service, provided by the same company, is exempt when it's for a higher secondary school. But that exact same service becomes fully taxable when it's provided to a college or a university. The type of institution is the only thing that matters. Fantastic. Now that we have the secret key, let's go all the way back to that first question and just completely solve it. No doubts this time. So let's look at this one more time. Engineering college, higher secondary school, private bus company. Where is the GST exemption? I bet the answer is popping into your head right now, crystal clear. Okay, let's break it down. We have a transportation service provided to a higher secondary school. Does this fit our very specific rule? Yes, it does. It's an institution providing education up to the higher secondary level, so that service is exempt. Perfect.
Now, what about the engineering college? Is it a school providing education up to higher secondary? Nope. Therefore, that exemption doesn't apply and the service is taxable. The correct answer is B, the school. Simple as that once you know the rule.
So let's lock this in. Here's your mental checklist for the exam hall. 1. Always check the type of institution first. Is it a school or is it a college? 2. Remember that those key services, transport, catering, security, are exempt only for schools up to the higher secondary level. And 3, for any institution after that level, like a college or university, those same services are taxable. Getting this distinction right is everything.